traders, this is your weekly video, and today I would like to basically talk about something that comes back every time. The subject is going to be the trend, and that's why I call this video Don't Fight the Trend, because the trend is really your friend and has to basically be your number one priority if you really want to save yourself a lot of hassle, a lot of issues, a lot of stress. The trend is very important here because it makes the whole difference in your approach to trading. Don't start with too many preconceived ideas. And what I mean by that is that, I hear a lot of people coming, a lot of my students might come at the beginning, and saying, oh, I like this stock, I like this company, I like what it does, etc., etc. It's okay, and even better if basically you have a rationale behind a trade that you want to take or a position that you want to take, especially if it's a company that's in a sector that you know pretty well. But the problem is that immediately when you start with that assumption or with that attitude, you start with a bias. And that's the biggest problem that you're going to have, because this bias is basically preconceived, and it will implicitly, almost like subconsciously induce your trading into what you think it should be. And that's basically why I'm saying, number one, don't start with a preconceived idea. Just basically let the market tell you what it wants to tell you. Second thing, you have to leave your ego behind. As human beings, we like to be right in almost anything that we want to do, but ego is a very costly matter when it comes to trading. Again, you can't have basically that sort of thing in your mind that's set in stone, because the market is not set in stone, and the market adapts, and you need to adapt with it. So that's why, yes, you might have a great ideas. Yes, you might basically think that this and this is going to happen, but at the end of the day, it might not happen. Sometimes you're right, sometimes you're wrong. The third point is that the market is not your enemy. And I hear a lot of that in people's talk when they say, oh, the market got me today. The market doesn't really care who you are, where you live, what the color of your skin or your religion. And at the end of the day, that's why the market is king, because the market will follow whatever it wants to follow. And it is not your enemy. The enemy, think of it that the market is your friend, and that's why we go back to the title of this video. The trend is your friend. Fourth point that I wanted to talk to you about, you have to start learning not getting married to a position, not getting married to XYZ company. You will take that trend as long as you can ride it. Eventually, everything that goes up will come down, and you have to realize the fact that at some stage you have to jump off the boat. That's why trade management is important. Knowing every step of the way where you'll basically come in, come out, whether you make money or whether you lose money. The last final point that I wanted to tell you about is your risk management is what's going to save your account. That's the most important thing. I keep on repeating myself with students, people asking me, risk management is what's going to basically save your equity. Preservation of your capital is the number one. You always have basically hundreds and hundreds of trades that are showing themselves, showing opportunities every single day, and every single week, and every single month, and every single year. The market will always be there, and you will always have an opportunity. But you won't have that opportunity if you crash that account. That risk management is what's going to basically wrap it up. That you're not going to fight that trend, that the fact that you understand that the market is king, the market is always right, that you have to be jumping along, but at the same time, when the market tells you you need to basically be out, then you need to be out. That risk management protects you within a certain amount of your equity and every single bet that you will take, so that you will be there tomorrow. If you were wrong, if maybe that trend was not the correct one, your risk management will protect your account and will make sure that you're around tomorrow to live another day. All right, we'll spend a few minutes reviewing some of my charts on my TC2000. I want to show you exactly what I mean by those trends and what we've seen in the past by people trying to fight that trend. So I'll catch you right after.
So here we go. I want to quickly illustrate the things that we've just been talking about. I can't think of any better example as Tesla. Starting from end of 2019, the stock Tesla was trading like sub $50 and had an amazing run. The first basically, we've seen different phase of ups and downs on that stock, but this is one of these really talked about stocks where you see so many people on social media fighting each other, trying to basically prove their points. Tesla is going to collapse, this and this and this and that. And I've seen that for so many months and now years that it's laughable. And again, that's why I wanted to illustrate this point that when you see that trend and when you see what Tesla has achieved from end of 2019, going from a $50 stock all the way to 12.50, it is amazing. And we've had all this time people have been fighting that trend. They've been fighting the fact that it's Tesla is a successful company, that Elon Musk is a visionary. No matter what you would think, I mean, again, it's not basically a personal judgment. I'm not trying to be judgmental or anything like that. But the fact is that he's been achieving great results for Tesla, for his space program, etc., etc. And especially, from the end of 2019, we had so many people talking it down and trying to basically fight it and fight it and fight it. Even back in November, when we've had like the announcement that Tesla would become a constituent of the S&P 500, people were still fighting it, and it was basically that big candle that you can see back in 2000 in November 2020 was the big beginning again of a big up leg following the fact that Tesla would be part of the S&P 500 benchmarking, and a lot of funds had to basically go and buy the stocks if they didn't own the stocks. But I want to show you something as well. Let me just share this thing. This is basically an old article that was published in Bloomberg in December 31st, 2020. And they were saying that basically Tesla short sellers lost $38 billion in 2020 only as the stock surged. This is also part of this article, the source, that Tesla short pain. Short sellers lost more on Tesla in 2010 to 20 than any other stocks. And you see, that's what they lost. Mostly institutional hedge funds that kept on being adamant that Tesla was a bad company, was a fraud. They wanted to short that stock, and it cost them in 2020 $38 billion. And again, I want to basically go back to that chart. This chart, if you know a little bit about the Dow theory, if you know a little bit about the AMA, moving average conversions and things like that, this is a chart that basically has to be immediately striking you in the face and telling you, I can't be short that stock. And if I have to be short, you have to be extremely disciplined at cutting your loss very quickly. And even if you don't want to basically writing that long position because you don't believe in the company, because you don't believe in the business, and because you don't believe in that trend, then at least, be super rigid in the risk management that you're going to undertake when you get short that stock. But you had people that kept on shorting it, and fighting that trend for XYZ reason that I personally don't understand. This year was one of my greatest years, especially riding that stock, Tesla. Another thing that I've noticed is, how many people they're going to tell you if they're looking for a fund or they're looking for a fund manager and they want to invest into something, and they're going to go on Morningstar or all sorts of similar services looking for the past best performers. No matter what the performance that you've had for the past 1, 2, 5 years, it doesn't mean that the future will be the exact same. And that's why, again, coming back to what we've discussed in the video just before, we need to learn not getting married to any position, to any stock, to any investment in general. We need to listen again to what the market is saying, and we need to have basically a plan as to when we'll come out, exit that position if the market is telling us so. And the reason why I'm showing you that is basically on that ranking that comes from my TC2000. That was basically the top performers ETF back in 2020. And you see, we had everything that was related to clean energy, so following up with all the ARK investment management that were the top performers on that year on 2020. New generation companies, Web3, etc., crypto, blockchain related projects, etc. If you look at basically the performance in 2021, then now I'm looking at the bottom list, the bottom performers list of the ETF in 2021, and you can find this ARK, the same one that was on the top 10 list of performers in 2020, being on the top bottom list of performers in 2021. You see, that was 2020. Amazing performance, roughly a performance of about 170% on that fund. It kept on basically going up slightly towards the beginning of 2021, and then nothing. It just basically, collapsed, almost at some stage down 40%, then basically was in a big range consolidating, and this year has been just absolutely awful, because something has been a great performance over 1 year or 2 years or whatever time frame that you're looking at means that it's going to keep on going. Try to go with that trend, but at some stage that trend is going to change. At some stage, basically, again, our DAR theory or our EMA, moving average conversions is going to start breaking down, and then that's when you need to get your cue, your signals that this is no longer that super window, that super performer, and I need to basically either start minimizing my exposure to it or literally basically exit the whole exposure to it. Some very famous traders, as this one, Paul from Paul Tudor Jones, where he says, I try to avoid any emotional attachment to a market. I avoid letting my trading opinions be influenced by comments I may have made on the record about a market. It's very important, many things that he says in that, I don't basically have any ego in what I'm going to say. I might say something 1 minute, and the next 5 minutes I can just basically turn around and think something else, because the market is proving me wrong. And that's, I think, one of the biggest strengths of this top traders, being Paul Tudor Jones, being Alan Howard from Brevan Howard, they can basically shift in an instant. They can basically recognize that, yeah, they had an opinion, but they're not going to basically adhere. They're not going to stick to that trading opinion, because if the market is telling them they're wrong, then they will accept the fact that they're wrong, and they will be even able to basically shift all the other way around without feeling bad about it. And finally, that's quote from Martin Schwartz, the Pitbull trader. For some of you have heard of him, great traders back in the 80s and 90s. He says most people think that they're playing against the market, but you're really playing against yourself. It's a real psychological game, really. You have to stop trying to will things to happen in order to prove that you're right. Listen to what the market is telling you now. The sole objective of trading is not to prove that you're right, but to hear the cash register ring. As it says, a lot of people think, the market is after them to get them. It's not true. The market couldn't care less. It doesn't know who you are. It doesn't know what you do. But the market basically, is king in the sense that you need to listen to what it says to you at this very moment, and you're not basically trying to prove that you're right. Sometimes you will be right, sometimes you will be wrong. But that's why this risk management is so important to avoid you getting into trouble in your trading decisions.
All right, so I hope that you take the point and you saw through these examples that really, we have to basically stick to that trend. That's super important. Trying to basically come up with some ideas, that's right. Having a rational banner trade, that's right. But the market will dictate us whether that idea is good, whether basically that timing is good. We have to be disciplined. We have to be patient enough. We have to basically make sure that we're not fighting that primal trend that's in the market right in front of our eyes. If you try to catch a falling knife, you have to keep in mind that you will end up basically getting cut. But the only thing that you can do is to contain the bleeding. And the way that you contain the bleeding is by respecting a strict risk management. That's what will basically save you. That's what will keep you afloat. That's what keep and preserve your capital. If you basically don't have this risk management, then you run the risk of losing it all very, very quickly, especially going against the main trend. Leave your ego behind. Doesn't matter, you will end up losing trades sometimes 20, 30, 40% of the time, sometimes even more. I've known many traders in my career that had very successful trading career while not being right more than 40% of the time. But those 40% of the time they were right, they were making 5 to 10 times the amount of the 60% where they were wrong. And lastly, I will say, market is not your enemy. Market is your friend if you want him to be. And as long as basically you adhere to it, you listen to it, As long as you basically respect it and you respect your risk, you'll be fine. So that wraps it up. Have a great trading week, guys, and I hope that basically we'll see each other next week. See you.